to everyone. We got a couple of questions, interestingly, specifically about taxes, whether more companies staying private longer and getting bigger means that they end up paying less taxes. And I think we tried to touch on this a little bit earlier with just the kind of the broader sort of what does this mean for the economy for the rest of us. So I guess, I don't know if any of you have any particular thoughts about, what does this mean for, for tax policy, for job creation, or any other just sort of broader economic issues that might arise because of this phenomenon we're seeing.
It's hard to say that the tax policy drives much of what private companies do, except to the extent of the whole mess this country has with overseas profits. So if a private company becomes truly international, and Uber's becoming that, and we've had other companies become that, then you have the whole question of how do you deal with the international issues, and will this country and hopefully the next Congress be able, which maybe will finally be a functional one, be able to find a way to get the profits imported back, whether it's a lower tax for a year, an amnesty, whatever, to get that money back into this country and raise taxes. But other than that, there's not much that happens in the way of taxes, except the capital gains taxes are delayed more because we can't sell for 10 years instead of 8 years. It's kind of a minor effect, I think.
And I think private companies and public taxes, I think, pay the same. There's not a change that goes on depending on your status in that sense, right?
From our perspective, as it relates to social policy, whether staying public or private, jobs in particular, I'd say from our perspective, as I think about us as a private company, as I think about if we ever became a public company, and the pressures or the dynamics at play in private and public and what that means for job creation. As I think about creating jobs right now through CommonBond, we think about business needs. And if we have a tech team that needs to grow because we need to build our technology faster so we can offer more products quicker. I think about building a business development team because we have a lot of partnerships we have to sign in a short period of time. And frankly, and I don't know if this is too controversial to say, or maybe in the face of a premise of one of your questions to Howard Katzenberg earlier, but you could argue that going public might actually reduce your ability to, I'll say it this way, staying private might allow you to keep jobs inside the company in a way that you're prevented from doing in an environment such as being a public company where the scrutiny is so strong on cost, and sometimes the easiest lever to pull is just to hack tens of thousands of jobs. And so as a private company, you're not necessarily under that pressure. I offer that up as a thought.
Yeah, Howard, what do you think about that?
Yeah, I mean, I would apply two different lenses to that question. First, in the short term, does it affect tax policy or job creation? I'm not really sure. As I answered before, if anything, you actually have to hire more accountants and lawyers, so your net income is lower and you pay lower taxes. But if you really believe that being a public company is the right thing to do for the long term, then over time, yeah, you should be paying higher taxes because you're a more profitable company and you should be hiring more people.
But do you think that, as David was suggesting, that do you feel like you're ending up having to focus a little bit more on the short term as a public company?
Yeah, I think you're forced to balance both, but I think in a very good way, because both are clearly important.
There was a couple of questions here about specific sectors. So I guess I don't know if anybody has any thoughts about sort of, like we were talking about before, there's some worry about, are some highly valued private companies overvalued? And, we're in an interesting point in the economy where I think some people are a little worried about what the next couple of years might be. We've been going through some great years. But are there any particular parts of the sort of the companies that are sort of attracting a lot of attention privately? Are there any particular themes or sectors that you guys feel like we're still in the early innings of, and that we might see the next crop of sort of unicorn type companies coming out of?
Well, I'm happy to start. I guess all of us are probably seeing it in different sectors, and I would argue that Howard, you probably are well positioned to comment on that well as recently being public. But we're seeing valuations very strong in areas such as cybersecurity and so forth, where multiples have gotten very high because it's a need that transcends all industries. Everybody across almost every part of the world is concerned about cybersecurity right now, and that has driven a lot of excitement and enthusiasm around those companies. But just to come back a second, I think dealing in all of the sectors, in private and public, to the comments we were talking about earlier in terms of the macroeconomic impact, we need to think about if there is not just a revaluation, because Howard's comments are right that it's not just about valuations, terms, and so forth that are dictating certain outcomes of companies, but if there's a lack of funding in the private markets because of, let's say, broader macroeconomic changes, or if interest rates rise and people feel more inclined to rebalance their portfolios, I think that will have a devastating impact across our broader economy. It's job creation, but it's also the ripple effect from that. And if you look at this whole country over the past few years, since 08, 09 and beyond, you look at the growth that we've experienced, San Francisco being probably the shining example of, cranes everywhere, and that's my hometown, so it's changing day by day. What happens if the private funding market dries up and those jobs aren't there for the entrepreneurs and for the people who want to participate in startups? I think that's something to think about from a macroeconomic impact that goes across all industries, whether it's technology or other sectors.
And do any of you feel like if we see a pullback in the private market, in the funding available, will the public markets once again kind of regain their preeminence, and that's where people will go to raise capital? Or do you think that the two things ultimately are related? Is it not? Should we not be talking about two separate markets, but are they both kind of reflections of each other?
I think they're related, but I do think that when the economy turns down, you look at the 2008 period, the people who are giving money to the private equity companies and the venture capital companies, the big institutions, they have an allocation to non-public vehicles. And if they're, when Yale and Princeton and Harvard's balance sheets got whacked because the public valuations dropped by half, all of a sudden the allocations to the venture funds and to the private equity funds went way down, because it's just numeric. It's the numerator denominator. We're going to put 5%. If our overall value drops by 50%, that 5% for venture is cut in half. And so I do think the public markets are more robust in those times, because they do want to keep most of their allocation in something that's a little more liquid. Remember, the liquidity in the venture markets and the private equity markets is years and years and years. 11 years, 10 years, 5 years. And if you're the big investors really need much faster liquidity. If you're running a mutual fund like Fidelity and you get a run, you got to be able to pay things out. And that means you need to go more towards liquid instruments, so the public markets do better in those times.
So given that, and just to wrap up, I want to ask everybody to just give a quick, maybe yes or no answer. Are we going to be talking about this issue, this problem, in 5 years, or do you think that we'll have seen a substantial shift, that more companies will be going public and fewer will be staying private for 10 years? Do you think we'll be talking about this in 5 years? We'll start with you, Howard.
Yeah, I think over the long term, there's definitely lots of correlation between private and public market activities. In the short term, there is a lack of correlation. So it could be the opposite dynamic in 5 years, where no private investors are giving any money and everyone's looking to go public. I don't know the answer, but there's always going to be that noise.
Yeah, I think it ebbs and flows, and it will even out. To the extent those of you in the audience are interested in this topic of public versus private, whether we're in a tech bubble or not, there's a great piece put out by Andreessen Horowitz in June of this year. Just Google Andreessen Horowitz tech bubble. It should be the first thing that pops up. And what you'll find are some interesting trends as to whether we're in a bubble and whether these unicorns represent what we saw in 2000 and post 2000. And what you'll find, I think, is going to be interesting. The basic thesis is that if you cut it from a couple of different dimensions, whether you look at tech funding as a percentage of GDP or whether you look at tech funding as a percentage of internet users in this country, it's remained relatively flat, really since the crisis and many times since the crash of 2000, 2001. And so some really interesting stuff in there. What you'll also find is that the exception to that rule is in this strata of unicorn, where you have the likes of T. Rowe and Wellington and a whole host that generally invest in IPOs that are investing earlier before a company needs to IPO while still in a private market. There you do see quite a balloon effect in private funding, but that, based on the data anyway, does seem to be skewing the overarching story, which actually appears to be more stable than what some of the headlines might appear. So it's Andreessen Horowitz, tech bubble, Google it, it should be the first thing that pops.
Well, you guys really stretched the definition of one word pretty far there.
Yes.
So, Sean, what do you think? Permanent change, temporary change?
So, succinctly, yes, we will be having this debate.
Thank you, Sean, for your answer.
You're welcome. We will be having this debate in 5 years, and the reason I view it is because as the world is becoming more and more flat, more people are connected globally, whether it's via broadband or mobile, et cetera. There's just more people participating in global markets, and the more participants, the more unique ideas arise in terms of how to make money, how to create wealth, how to gain liquidity. And so there will perpetually be this debate around what is efficient and what is optimal.
Thank you, guys. Thank you so much. And thank everyone for joining us here today.
Yes, by the way.
Oh, I'm sorry. In the blizzard of words, I forgot Howard Morgan. He says yes, by the way. So we're unanimous on that. And thank you, everybody, for joining us.